Okay, good day everyone. This is Gil, and today we're having a public webinar um, about one of the things that is less spoken, but if you on the verge for or aiming for being a professional trader, you should be considered. We are trading not just for fun. We want to make it to be a profession, and for that we need to adopt all sorts of skills and concepts that will help us overcome the unique features of what it is being a professional trader. So this webinar is all about these aspects, and it's based on my years of experience and the things that I've been um, learning throughout my course of being a trader, and through my course of educating traders along the years. I've collected a lot of insights that I gained for myself, and I was trying um, to create um, ways to deal with the unique challenges that trading is facing. So let's just start with this, and we'll see where we're going. Feel free to ask questions, and, let's move on. Okay, so what is the attitude that we need to for becoming a good trader? What is it that we need to embrace in our thoughts, to change the way that we think in order to be a professional, successful trader? One thing is the things that we're going to discuss today is what is a professional trader and what are the unique features of um, this profession. I will talk about some paradox that are in the profession and some similarities to different professions, and and I will try to map out things that we need to consider in the way that we develop ourselves as professional traders. And as much as we can reach out, and the insights that we can collect and find solution for all these features, that will help us to grow into for being a good and professional traders. So let's start by simulating what it takes to be Leonardo Messi, what it takes to be Jimmy, what it takes to be Serena Williams. You know, all these professional athletes that we're seeing, they are just um, exploding on the courts, and they are highly professional, but we have something in common with them. The thing that is common with you and Serena and Jimmy and Leo is that when you are trading on a real life trading account, you are trading the major league. You are competing, Serena Williams. You are playing guitar with Jimi Hendrix, and you need to be at least as good as him in order to have the audience listening to you. You need to be as good as Leo Messi in order to take money from the same court that he's playing against you. So just imagine, and this is something that I say maybe to scare or to shock you, but this is how serious this business is. When you put your first real dollar in the market, you are playing the major league. You are playing the Premier League, and that only. There's only one league in the market. You don't have little league. You don't have amateur leagues. you have to excel on this major professional league from your very first dollar in the market. So just mind who are the players you're playing against, okay? And you cannot afford yourself to be an amateur because they will eat you alive. They will play tricks that works for years, for decades. The same tricks are being played on amateurs and they're taking their money all of the time. There's only one league you can join when you put your dollars in. This is what makes it different from almost any other profession. If you think of maybe, let's say, open a restaurant, you can be an average restaurant with good location and you'll have business and you can make a living. But in trading, you have to compete Serena Williams, right? You have to compete Leo Messi in order to make money on the market. There's only one league, okay? I hope you get my point. So the things that are challenging us in the thing that are challenging us in this profession are things that we need to resolve. And if we resolve them, then we will have the edge for succeeding. And one thing that puts a lot of people in stress is the definition of what is success. And if we are stick to this example of professional high-end athletes or very highly skilled guitar player like Mark Knopfler, David Gilmour, Jimi Hendrix, just name it. They're all being on the stage and we love what they're doing and we're just being so impressed with how professional they are. But just remember how many years are invested in practice, in exploring, and in try and error. All these things are mostly not available for us when we are being entertained by their master's skills. So in order for us to develop ourselves to be at that top level, it takes a lot of learning and self-development for us to do before we can actually being on that professional court. So I was mapping a little bit of things parameters that I think that if we resolve them, if we understand and if we acknowledge them as our challenges, and if we can resolve them, then we can start building step by step a success path toward absolute success. And one thing that I think that is the most insightful thing that I can tell you today is that when you define success, you should define it not just by a binary way, just let's say I'm earning money on the market or I'm losing money on the market. Success should have more shades to it. It really depends on what stage you are at the moment. Let's say you are now a losing trader. Your next goal, your next success will be to be a break-even trader. Okay, if you are a break-even trader, your next goal will be to be a profitable trader. When you are a profitable trader, your next goal, your next success will be to gain more pips, more money than pips. Okay, because you know there are some ways that you can just compensate for losing pips, but still winning money. So maybe your trading is not that efficient. You can be more efficient even when you're making money. So there's always a new horizon that is expanded from the hill that you're standing on. And these should be your shades of success. It's not just about making money or not. It's about progression. It's about what is the thing that you need to work on in order to achieve the ultimate success that will come within a few years. And you know, there is this saying that there's this rule of 10,000 hours. If you invest 10,000 hours of something, then you become a master of it. I think in trading, it's sometimes works and sometimes it don't, because it really depends on your personality and on the way that you perceive success and fail, and how stubborn you are, and how and if you were taking the good path. I can tell you that from my experience at the beginning, I had today I know, but back then I didn't know. I had at first not so good teachers that taught me the basics that I needed, and they were teaching me the wrong things. I don't know if these are the wrong things, but they were wrong for me until I've found the thing that made me successful. It took me a few years to find that. So that was my goal. So for my success at the beginning should have been not making money, but finding the right strategy or the right method that it makes sense to me and that I can work with, and be creative and adaptive to whatever the market is challenging me with. So until then, it took me about 4 to 5 years to find the right thing that actually made sense for me. And then I needed another year or two to master this. And then, so just imagine and just plot this to yourself. There are many shades of success. And this is something that we're trying to do also in the Forex. We're trying to define success with different shades. It's not just about if you make the challenge for the first time. This is why we're very tolerant and letting people competing once or twice or even a few times until they make it to PM, and then they make it to PM 1, 2, 3, and so on. It's because it's all about progression. We are humans, we are gaining skills, and this is the very essence of how we should consider ourselves as traders. Trading is not technical task. If you do this and that, you'll have success. It's not working like that. It's a skill. We all have the information. We all have the teachers that will teach us how to play tennis, how to play soccer. We all have the courts. We have available all these. We all can put our hands on a guitar, but we cannot play like Jimmy unless we've put the hours, we put the knowledge, we've learned everything, we have the right insights, we progress step by step. So same thing with trading. Trading is a performance skill profession. It's not about doing the right thing. You can do the same thing, the same algorithm, but it's not work. If you're not adaptive enough for things that are changing, you're not going to make it. If you if we both enter the market at the same price, and I'm greedy and I'll wait for a bigger wave, and you'll take your profit half of what I did, I can just close my trade at break even or hit my stop loss because the market didn't hit my target, but it hit yours. So you're a winner, I'm a loser, and we both enter at the same price, the same direction, the same asset, right? So it's all about your patience, your humbleness, your awareness, about knowing what are your limits, what are your strengths. All of these elements should be learned by yourself, and that will configure the way that you actually embrace success in trading. So let's start by, I've been mapping a few elements of what it is to be trading, and this is only my opinion. Maybe just let's move on through this, and I think you'll get the concept, and you can add your own and try to analyze and how you bring this, bring more ideas to this, and try to resolve this with your own self. And okay, so first, the market puts you in an environment that has a lot of uncertainty. So to deal with uncertainty, you have first to be humble. What it means to be humble? It means that you don't say to yourself, I know where the market is going to. I'm not about, trading is not about predicting. You know, we are sometimes associating with, I think they call daily FX. They are very big and considerably one of the leaders media for our industry. And they were asking me at before the beginning of 2021 to give them predictions of where will be the euro dollar, where will be the pound dollar within these quarters, and they asked me to specify rates for where the cable will be at the end of the third quarter of 2021. I told them that I'm not participating in this. I'm not about predicting. I think trading is playing tactics, is playing what you see, is playing about, is looking at what you have and looking what the charts are telling you and playing upon this. I don't know what's going on. I don't know where it's going to be because of many things. We'll cover this in just a few, but we have to be humble. We have to admit that we don't know nothing. We can only play about what we're doing, and we cannot be arrogant and saying that we can predict and stick to that position because we're thinking that the price must go in our direction. The price won't listen to us. The only thing that we can do is play tactics. And what is playing tactics? It's like when you're riding waves on the sea, you don't say, I know where the waves will be and where it's going to break. Every milliseconds that you are on that wave, it's decision making and acting with the situation that the ocean gives you. And if you're talented enough and skillful enough and experienced enough, you will know how to ride that wave all the way through. And if you're not, the wave will take you halfway. You won't get to enjoy the pipe. You know, all these things that are the the positions of the skillful and the people that we're very jealous of. So we can only play on what we're seeing. And one way to resolve this uncertainty thing is to have a scenarios action plan. I think I've covered this about 2 or 3 years ago in a webinar. I think it's part 4 on the first webinar series we've done with investing.com about supply and demand. And and we've described how we can have our trade and still get into our trade and still be very attentive to what's going on instead of just entering the market and just waiting for the market to resolve our trade to a win or to a loss. Because when we decide to enter, many things can happen. You know, the market can jump away from you toward your winning side. It can shock you always around the break even. Sometimes you're on a little plus, sometimes you're a little minus for a very long time, and then it wear you out. You'll be tired. You'll take yourself out on a break even, and then price spring to your direction. So you will ride, but you're not in the trade anymore. You know, all these things can happen if you learn about all the scenarios that you have experienced, and you write them down, and you say, okay, if I enter the market and the market do this and that for me, I will do 1, 2, 3. I will have scenarios and action plan. So when the market puts me through a certain scenario, I will have a ready-made scenario, a plan to act upon. Okay, so and maybe not all of the time, and for certainty, it's not going to be all of the time that your action plan will work, but it's a plan. And if you stick to the plan, and you know the plan is right because you've studied it and because you've back tested it, you should have the odds to win it by the statistics, right? So if you map your scenarios according to your understanding of what the market is doing, and then that's one resolution of how to deal with uncertainty. We've covered this. We're playing the Premier League, and there's only one league. So what it means for us to resolve is that we really have to have a plan. We have to have a trading plan. We have to know how to find the best trades. We have to know how to not taking bad trades. Even if these trades turn out to be good, we should not be dazzled by this or by the result, because if we have a profile of what is a good trade, because we have reasoned this profile by backtesting, the market is always going to confuse us with bad entries that work and good entries that won't work, because taking losses is part of the game. Taking losses is part of playing statistics with the market, because this is only the only tool that we have. We play statistics. So this is why we really have to stick to the entry and take only entries where we know that we have a very good probability, or maybe the best probability to take them, unless, I mean, this is my way of doing things, unless your probability is taking a lot of trades, and then few of these trades will work wonderfully, and you know how to make the extra, the premium from that way of trading. So I'm not very good in managing a lot of information in front of me. It's get me confused. So I prefer to cherry pick my trades, and I think with my method, I have enough opportunities for the time scale that I'm working on. So I find my comfort zone on that. But if you think that you want to experience and enter the market many times until you find your bonanza, that's good too. But that will be your way of finding your high profile trade. Okay, and you should know that that should work for you. But whatever strategy that you have for your entry, you have to have a good and solid and non-negotiable loss strategy. You should take losses with pride, and I think I've taught this also in my webinars that if you are having hard time taking losses, try to train yourself that every time you take a loss that was pre-planned or it's within the parameter of the loss that you are planning to, meaning let's say you're risking only 0.5% of the account and you've taken that 0.5% and you never shift that stop loss against your agenda. And you've taken that loss, go to the mirror and celebrate with a big smile because you've done the right thing. So every time you take a loss that it is within your parameter, it's not a fail, okay? Because the market is not predictable. So, and we're playing risk management. So you were doing a great job by taking the loss that you were pre-planning, okay? And if it's a reasoned one, and if you know why you've taken it and why you've placed that stop there, and it makes sense to your trading plan, then you should go and celebrate a loss. Train yourself to love and respect the losses that you're taking, because taking losses is a very, very hard job. It's practically, and we'll cover this in 2 topics away, it's practically a counterintuitive challenge that is unique to the market, and we'll talk about this in just 2 topics away. The next thing is that you need to be very adaptive. You know, you're playing the pros when you're on that court, and they have a lot of tools that you don't have. We'll discuss this in a second as well. But just know, be very much aware that they have tools that you don't have. And we can only look at the current and the history, and we have no way, no effective action that will actually create an impression on the market or something that can change something in the market. We can only be responsive with the amount of money that we're trading, most of us, right? Unless we're a big fund where we can just manipulate the market. So we can, they will play a lot of tricks, and sometimes they will be aware of different methods that in the market we are all seeing the same charts, we are all seeing the same news channels, we're all seeing Bloomberg and Reuters and reading the same feeds of news, and so they know what the mass of people will think about the information that everybody's seeing, and they will play with it. Sometimes they will let you feel that you're right, so next time they can trick you. Okay, so I'm not trying to scare you, but this is, just imagine that if you had that ability to influence, you would do that too, right? Because it's a game of chess, it's a game of mind. So you really have to be adaptive. Sometimes your system won't work and you need to figure out why. Maybe it's a higher time frame point of interest for the big players. So that's why it's not working anymore. And then when it's over that zone, it will return to act normal in the terms of your strategy, and maybe not. So you really have to be adaptive. This is why robots and EAs won't work for very long, because the market is ever changing and every time market is reaching to an interest point, different tricks are being played. And so there's nothing to compare with the human mind or the human way of processing information faster and more efficient and more creative and more understanding than just the human brain. So we've just mentioned this. The market put us through an ever-changing condition, and we really have to manage this. So in one way, we can not always spot the right moment where the market is changing. So this is why we really have to have a very solid risk management. We should enter every trade and consider the worst can happen. The black swan will happen against our position the very next second after we've entered. How are we going to protect ourselves from devastating months or weeks or days or money of effort that we've put through? We cannot allow ourselves to invest many years and then lose everything on one trade just because we were not wearing a seatbelt. So a seatbelt is a stop loss, and lucky for us on the Forex market, stop loss is mostly respected around the prices that we've asked, unless there is a major news and there are gaps in the market. But unlike the stocks market and the futures, we have more opportunities to receive the price that we've put for our stocks than than from other markets. So just use it. And even if you say, I'm using hidden stop loss, I'm using conditional stop loss, do use a hard stop loss at a catastrophic level, way beyond where your logic would be taking you out, where you should be, because sometimes the market will be so much faster than you can operate, and so you have to have that another tire of risk management. Every time you enter the market, it's in terms of position size. Don't trade too much, be humble, take it step by step, the turtle way to grow your account, and don't be greedy. And also in terms of stop, put your catastrophic stop way beyond and let your mental stop loss or your algorithmic stop loss work for you, but do have that extra measure of risk management. And then you should have the action plan. The action plan is something we're trying to promote and educate quite a lot here with the Fivers. If you know about our risk management booklet that we've sent to all our traders last month. If you didn't, you can go and you can have your own copy of this. We send it to your home. It's actually a physical booklet with a lot of instructions where you actually being dictated how to write your own trading agenda and plan, and it will challenge you to really deep think about your strategy. And then it has a lot of logging papers where you can just learn and analyze and summarize your activity throughout the time. And that is we got a lot of great great reviews about this booklet, and people were very happy and find it very efficient for their for their daily routine. And if you want to get it, just sign up for Saul risk management course. And if you complete this, then you can sign up and we will send you that booklet. So it's really valuable. So you should have a very solid action plan where you think of all the different elements and you become aware of things, and then and if you write down your manifest of how you're trading, this is actually become the policy of your business. Just imagine that every business has its own routine, its own way of doing things. It's knowing the system, how it works for them. Just compare this to any type of business. They have policy of how they do things, and so do you. And unfortunately, not many traders do that because it's a one-person business. So you don't have to report to anyone, and so you don't have that conversation that actually brings new ideas and ignite new ideas or challenge your thoughts, sometimes for the better, sometimes for the worse. But you don't have that um, um, environment where you can learn from the experience, or you can refine your experience by explaining to the less experienced people. You don't have that thing that an office have, because you're working just for yourself. So working on your paper and being interviewed by a paper like we've done, but you can also look up in the internet all these templates for the trading plan. That will make you smarter and more solid and more defined with your action plan. Next thing is you really need to learn new tricks. You should know what tricks are being played on the markets that you are mastering, and you should learn new tricks yourself, how to actually take advantage of what you're knowing. So always be on the side that learn new things, explore them. But there's a downside for this. Try not to get confused with this. Okay, don't try to take new ideas straight away into the real market situation. Try to demo test this. Try to combine this slowly. If you have new things, and even if you're really trusting them, start slow. Start with very low positions, so you just can sense how it works for you, how it makes sense, because only when you're live with these ideas, you will understand what it really means. So you really need always to reinvent yourself, learn new tricks, learn new stuff, more methods, more tools to collect to your toolbox. One thing a lot of people are doing wrong is that they are putting their trust and their money on logics that they were never trying themselves. And I'm speaking of downloading all these indicators that give you signals, or EAs that you don't know really who had coded this. And even if you know the logic or the concept behind this code, you don't know what bugs are in this code and what the true limitations are in it. Don't trust all these things. I know it's a shortcut, and we are all of us are very eager to participate in this exciting market and making money and everything. But be modest, be more slowly with your learning, be more cautious, be less naive with what other people were doing. Just remember that the market is ever changing. A code that was written a year ago is not necessarily going to work good at these days. If you have a code that has too many specification, you know, if it's a 0.1 factor versus 0.2 factor just on the pound Japanese yen, and it won't work on this, this is no good, because the pound Japanese yen will change in a week. It will change its behavior and it won't work anymore. So too many people are trusting these shortcuts, and it's just a wrong thing to do. Trust only yourself. Trust only your backtesting and understanding. If you don't know why this strategy work, don't go for it. Just learn and find out what stands behind it. So now let's go back to the counterintuitive. So this is my one of my favorite things that I talk to people that are new to the market, and I'm always surprised that people that are many years in the market are not truly understanding this in full. Just think about how much agony you are experiencing. Each one of you think, if you're 1 year or 5 years or 8 years in the market, I can tell you that I'm in the market since 2006. For me, taking a loss or seeing my trade getting into the stop loss is painful, even today, okay? Cutting loss is a counterintuitive feature of the market. It's so hard to take. I think it's one of the hardest things to that this profession puts you through. And I tell you why. Because from the very early age, we are being educated to be like Serena Williams, to be like Roger Federer, to be as good as possible. We are put into a symmetric court where we both have the same conditions, let's say on basketball. And if the team against us are winning, what are we going to do? Are we going to surrender and tell them, okay, take the game, we still have like 15 minutes for the game, but I know you're going to win, so I give up? No. The coach will tell us, fight, 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 right? So this is how we are trained. If we are seeing a loss, we are trained not to give up. But in the market, it's really the other way. If the trade goes against us, it will be very hard for us to take a different mental approach and say, okay, I'm losing that trade and I need to give up. I need to cut this loss now. Why? Because I will do after the entry analysis, and I will see as much as possible, as much as clear, as much as non-conditional, and it's very hard to do so, that the trade is going against me, and I really have to cut this loss. And there's another thing, that there is no coach or crowd or my father on the sideline that will tell me, cut this loss. Okay, I have to take that decision myself against the way that I was trained and cultured since I'm a child. We are being taught to fight all the way to the end, but it's not true for trading the market. if we're seeing the trade is not going our side, and we have the ability to cut all our emotions and do new analysis and see, well, this trade won't last. We have no control over what the market will do. But if we have all indicators telling us that it's going the wrong way, most people will ignore these flags and signs and alerts, and they will say, okay, I will give it another chance. I will fight for this. I will maybe shift stop loss a little bit lower, so I will let my trade breathe and come back to break even or so. Believe me, I'm doing this mistake every now and then, even today. It's so hard. It's so counterintuitive. I think it's the hardest thing to do. It's to take your own decision against your previous decision for entering, admitting that you that the trade won't go and not letting go. It's everything against what we were brought on. So cutting a loss, it's very hard. How we can resolve this, I think we've discussed this before. We really have to train ourselves to respect losses, and if the loss was cut at the right time within our trading plan parameters, we should go to the mirror, smile and celebrate and say we've done good because we were protecting our portfolio. It's not about one trade, it's about the whole portfolio. It's about the whole month of hard labor and time and effort and emotions that is put through. And we really have to cut this as soon as possible, as soon as we know that it's going the wrong way. It's really hard, but every time I cut a heavy loss, I just take off this heavy weight from myself and I say, okay, I cannot return this loss, but if I had to suffer this a little longer, that would be even more painful. Now I'm relieved because I can continue doing the things that I'm doing. I can continue working on my well-proven statistical way of trading because I know I have good risk management. Few of them will lose. It was within my parameters. I'm happy, I'm celebrating, even if it's artificial. I really have to train myself to respect losses, and it's hard. So you should work on this. Fear of missing out is another aspect of a lot of people doing. It will prevent you from being, people are backtesting systems, and when you're backtesting, you would really wait for the signal to blink for you, right? But then on real market situation, if you've seen that signal and you've missed it by a few moments or by a few hours, depends on the time frame that you're working, you would jump on it because you're fearing to miss out. Maybe you get too early, maybe you get too late, but this thing happening all of the time, and that's the difference between backtesting or demo trading and in real trading, because in real trading, we are in the real world. We say, okay, we had this opportunity, we're waiting for it. We spend the time, we spend the thoughts, we did the analysis, we talked about it, reasoned with it. Now we've missed it. I can't afford not to be in that trade. And the worst thing that can happen to you on this is if that works for you, because then you'll do it over and over again. And that's a wrong thing to do, because when you're getting in too early or when you're getting in too late, the drawdown and the risk reward ratio factor will damage you a lot. And also the time spent in drawdown will put you through so much agony, and your margin will be caught by this trade. Everything is wrong about this. Stay away from it. Be aware of it. We're also Over competitive, it's part of what I've explained with with the issue of cutting loss. We are trained to be competitive. If something don't work, we try harder, right? The teacher tell us if you're not good in math, try harder, work harder. It's counterintuitive on the market. In the market, you don't need to work harder. You don't need to overtrade. You don't need to spend more time or more effort or work harder. You just need to do the right thing. And the right thing will appear when it's appearing. So you cannot apply over competitiveness on this. You really need to just wait for the next true cherry-picked signal. So you can't be over competitive, but we are. If a daily or a weekly target haven't reached, should we stay more on the screen? Should we enter more reckless trades because we want to achieve that goal? You know, so over competitive is something people are not really aware of, and it's over intuitive. If I work at I don't know, and I try to satisfy my boss, and I'm working and I'm not delivering enough, I will stay over hours to complete the task and make my boss happy, right? This is how all the movies on Hollywood works, right? But it's not right for the market. The market is always giving you the opportunities when it's right. So every time you're out and waiting for your next trade, just wait for the right time where your system blinks for you with the most probability cherry-picked profile. Confidence is also an issue. Overconfidence or lack of confidence. If we have a good strikes, then we're overconfident and we can be reckless. And if we had bad strikes, we can be unconfident, and maybe we won't get into the signals that we're seeing. We should learn how we are actually being affected by this. But this is actually not really counterintuitive to a real life situation, but it is a counterintuitive to what you're feeling. Your feeling telling you that you should be aware next time you enter the market because you're uncomfortable. Your feeling telling you that you have it, and every time you click on the keyboard, you'll have a winner trade. That's what your feeling are going to tell you and signal to you, and that will make you reckless or too much careful for not taking your signals. So, and one of the things that most people are not aware of is the lack of authority. Most of us would come to trading because we want to leave our boss. We want to have our own business. We want to be responsible to our own financial future. And we want to hone that profession ourselves. And that put us into an environment where we are just myself and the computer. And every time I have a question or a doubt, I have actually nobody to talk to. Maybe I do have a mentor, maybe having a good trading pal that I can cooperate this. This is part of the solution. But for the major part, I have to take the decision myself. And the worst thing is that so many times I will do repetitive errors that I might not be aware of that they are errors, because nobody is looking over my shoulder and sharing his experience and saying, you know, that you're doing this over and over, and that puts you through bad results, right? The overcome is because you're doing that and that. This is based on my 20 years of experience. Nobody's telling you that. You have to learn this yourself and find out this yourself. It's really something that it's almost impossible to be aware of something that you're not aware. Because it's a lonely thing, we are trying to educate ourselves, and it's much harder and much longer. And until we get the insight, maybe we gone through a lot of frustrating periods of times until we actually had this ringing bell and understanding what's going wrong. So because of we're working like this in an isolated workspace, our awareness and the blind spots that we are facing are sometimes very, very critical, and we are not very sure about this. To know how to cope with this, we really have to keep ourselves always in learning, always find mentors, always do courses, always learn broader aspects of what you're doing. Don't just spend your time on working on the analysis or working on the strategy or creating tools that help you resolve very specific issues. Learn on the broad aspect of the markets, of psychology, of yourself, even do yoga, do meditation, whatever works for you in order to be more complete and whole when you come and aware of how you feel and what this profession puts you through psychologically and mentally, and how it's actually motivate you or put you through. These things really need to be learned. So always be in learning and expand your awareness to all different aspects, to knowledge, to strategies, to your own psychology, to your own behavior, to your own way of acting. Write a lot. All these things will help you to find out blind spots that you weren't aware of and find good resolutions for them. Because we are retail traders, after all, we're just small insects on this market. We have less access to information like the big players do. I think it's really obvious for me to saying this, but it's not just that we don't have the access and the subscriptions to good information. It is that we also are being exposed to too much information, noisy information, and deviated information, that it's really can be a daunting task to filter out and trust that information and what's their interest behind it. So that's one part of it. And the other part of it is that we're just a single person. And just imagine a trader that works on a big fund with another 50 traders, and he comes every morning and he sits on a round table with another 50 traders. Some of them are very, very experienced, and each one of them will say their own view on the market. Each one of them is working on a different aspect of information collecting. The amount of information that you have to reason with your decisions on the market is so much greater than you can have it your own. Even if you could have filtered all the noisy and all the deviated information in the market. So just being yourself is puts you in a very, very inferior position of access to information. So my way of doing this is playing statistics, playing probability. I will only enter key levels. I will only learn about the price action signals that tells me, okay, at this key level, I will look for this price action event. And if that works, I will enter, I will take that risk. I mean, having that plan of how to actually being tactic in the market is will help me find my probability environment so I can extract money until I'll be big enough or talented enough to get into that big room with another 50 traders and maybe contribute and get their own contribution for my odds. But until then, I really have to be tactic. And you know, the something that I always being opposed is that people calling their trading way a strategy. It's not strategy. Most of the trading systems that we are dealing as retail traders are not strategies, they are tactics. Okay, strategy is understanding the bigger picture and try to deploy a plan with different tactics to create the outcome that you want. We are just playing tactics. We just want to enter at price A and exit at price B, and that's it. That's tactic, not strategy. So it's a word too big for what most of us have. So if you want to have a strategy, then strategy is about the brain. It's about analysis. It's about a whole different understanding of what's going on in the market, and then you deploy one tactic action to actually exploit what you understand. Okay, so let's talk about what the big players are having. And again, the answer for this, I'll give you the spoiler. The answer for this is having your very solid trading plan, risk management, and mental awareness. But do know that the market is a serious court. It's where the professionals are playing. You know that the big funds, they are participating in the very same court that you are. And you know that they have a lot of power. What power do they have? They have enough deep pockets to do trial and error or to create impressions in the market. They can invest millions just to make an impression that price is breaking a level, and that will bring so many people buying at higher price, and they will sell them this. Okay, so that's called manipulation. They will invest a lot of money for bringing price just 10 pips or 20 pips high to make an impression of something going on. They will freak out your indicators that will tell you that you have a good momentum to enter, and they will sell on you. This is manipulation that they can trick by injecting a lot of orders into the market, and they have the big enough pockets. And this is strategy, by the way. They invest. They can buy with millions just because they know they are going to sell you in 20 pips distance because their position should be short. And this is why we see so many choppy price action so many times, because these are little manipulation playing out or being tried out by these, and they have a lot of pockets for this. And we are so desperate to win each and every trade of ours. Every time we are missing a trade and it's not working, it's devastating, right? We just enter one trade, it's not working. We say, okay, we didn't get it. We don't have a good strategy, right? But they are doing this all the time because they are playing with their deep pockets. Another thing is that they have the ability to actually feed the media with deviated information. Let's say Warren Buffett is having a full transparency with his portfolio. Everyone see his portfolio, and so a lot of people are taking his word and say, okay, if Warren Buffett is buying this, I will buy that too. But what is he doing? He already bought this, and he know his name has influence, right? And so if he say that he bought Tesla stock, everyone now will buy because the genius says so, and they are feeding his stock higher, and he can sell now. Okay, so just every time you hear somebody on the news saying something, he got an interest. So it's a tool that only people that have access to the media can deploy, and they are already positioned in a way that once their announcement will come out on the media, they will just take the fruits of it. Okay, so that's a tool. This is what feeds Reuters and Bloomberg and CNN and CNBC Money and all these magazines. They are getting a lot of free items all of the time because these people that feed them information are just biased with their positions already. So sometimes you can ride on this, sometimes it's a trick, sometimes you can earn with it. You would never know. But the thing is, the lesson that I want to learn from it is that because we don't have these tools like they do, we have to be tactics. We have to play tactic, we have to play probability, and that's it. This is the only tool that we have. We cannot predict. We cannot justify our trade because Warren Buffett says so. We cannot justify our trade because somebody said something very, very smart and convincing. Because if it's convincing, it could be also manipulated and biased. And so don't buy any information from anyone because everything is biased. Be tactic, look at what's going on now, act, respect your losses if they come because everything can happen. We know nothing, we're just an insect on this thing and we can only play probability. And I think I've mentioned that we're just one person, we're one man band that's doing analysis, we're entering the trade, we're managing the trade, we're spending the time, we're doing the monitoring, we're doing everything, and we're collecting information, and we're trying to make decisions. We don't have a boss, we don't have any more experienced people, somebody to teach us or to get us aware of something. All these are going against us. So we really have to be better and better all of the time. Continue learning and just be better. So I just remind you that we cannot afford being an amateur because we're playing on one league, which is the Premier League. And if we're getting there not ready, they are going to eat us alive. This is why we really have to be all of the time in control of what we're knowing, not giving out the control to other people that will tell us, don't buy information from anyone, even from your friends or from your mentor. If it doesn't make sense to you, if you don't fully understand this, don't do it. Work on it until it sinks, until it makes you, until it really makes good logic for you. And so you understand and you know that you mastered this. For this, you have to practice and backtest. And this is one thing that athletes do and not, and many traders don't. How many of you are actually practice? You go, you trade live. Some of you are trading with us, with the fibers, and you trade with us with real money. How many of you at the end of the day or during the weekend will take yourself and practice your trading and refine your trading plan and do all these mental procedures that you need to do? How many of you are doing this? But you can trust Serena Williams that when she's not on the court on a tour, she's lifting weights, she's running, she's working on her shots, she's working on her placement, she's working on tactics, she's working on mentality, she's doing massages and therapy and whatever. She is being prepared for the next time she's going to step on the court. How many of us are actually practicing and not just waking in the morning and playing on the court? Remember, trading is a profession of performance, of skill that is being collected through years and experience, through learning. So we have to practice all of the time. We have to experience and explore more ideas, right? So a good way to practice is to backtest our ideas, is to forensic ideas. We know, you can work only 6 hours a day, or 8 hours a day, or 4 hours a day. Whatever hours that you're working, you probably missed signals that were at the time that you were doing something else, or asleep, or partying, or whatever. Okay, so do go and backtest all the events that were happening that you weren't there, and see how you were reacting. Maybe you can find new scenarios that you can map and create action plans for them. Practice. Maybe you've learned, you've seen something new, and you need to, and you think it's complementary to what you're doing. Maybe you want to incorporate this sometime soon. Go and practice. You can go and buy a Forex tester and try live testing. You can do it on TradingView. You can do it on MT5 with their back testing thing. Do this occasionally. Go to the gym, go to the trading gym, because this is your profession. Go and practice. And yeah, preparation meeting opportunities is the really phrase I really like. Maybe you hear, I don't know if you brought it yourself or you heard my interview, because it's the quote that I really love. Thank you, Nirmal. Learn new stuff all of the time, because the market is constantly changing. It's constantly creating new forms, new tricks of playing, different incentives and bias, and participants are joining at different times. So everything is changing. Try to develop yourself and be more skillful all of the time, and explore. It's part of learning. Explore. It's learning and practice all together. These all together will bring you the control that you need, at least in our size. So overall, like Serena, like Jimmy, it's working hard, practicing hard, so we can perform in the money time the best way that we do. So we're working hard for making the trading easy. This is the essence of the mentality and the concept that you need to bring when you are come to trading. So thank you so much for being here. If you have any questions, I'd like to hear. And if not, thank you so much. This yes, this session will be recorded and placed on our YouTube channel, so you can review this later on. But I think it's more conceptual presentation where you just need to intrigue you in thinking of trading as something that needs to be very much invested all around on your own qualities and build it around your skill set, and this will also help you find the right attitude for finding your own success, because the way that I find success is not going to be yours. This is why so many people are being disappointed of mentors, because they seeing them success, but we're not, because we're not built the same in our personality. So that's the reason for it. Anyway, I hope you enjoyed this session and it intrigued you to rethink. And I remind you that if you go and do our risk management course on our website, at the end of it, if you finish it, you will be entitled to request the trading plan notebook that will be sent to your house at the end of it. So please do it. It's free for anyone who's within the fibers. And thank you so much for being here.